If you've been following Apple stock lately, you may be curious as to why there was a 0.5% decline in price. It appears that the IT giant has chosen to reduce the flagship position held by Warren Buffett's Berkshire Hathaway. 10 million shares, or around 1.09% of the business's Apple shares, were sold by the company. The value of this transaction alone is estimated to be $1.8 billion. Yes, Buffett still owns a sizable 5.9% share in the $167 billion iPhone manufacturer. Even still, Buffett's remarks at Berkshire's annual meeting last year, during which he even declared that Apple was a better business than any they owned, made this move surprising. He acknowledged in the same meeting that he had made a mistake when he had previously slashed Apple holdings at Berkshire. What then led Berkshire Hathaway to sell its Apple shares? We'll explore 3 potential reasons in this video that could have led to Buffett's change of heart. But that's not all. We'll also reveal the unexpected equities Buffett has been substituting. So make sure not to miss it. Welcome again to Investing Tutorial. If you've been watching Berkshire Hathaway for some time, you may not be all that surprised by this sale. This is due to the well-known investor company's holding in Apple, which has increased to an over 50% of its stock portfolio, which is worth over $350 billion. Many investors who follow Berkshire have worried how much Buffett and his deputies would allow the stake to grow as Apple shares were driven higher and higher by the tailwinds of the tech industry. Additionally, Berkshire sold 32%, or around 30 million shares, of its ownership in the media company Paramount Global and 78% of its interests in HP, a manufacturer of PCs and printers. Thus, some anticipated the Apple deal. However, the reason Berkshire sold. One explanation for this could be that Berkshire believes Apple is overvalued and presents a chance for profit. This is just one of the 2 possible explanations. The current price of Apple's shares is 28 times expected earnings, which is more than the sector median of 22.27. In the event that the company achieved stellar growth, that forecast profits and multiple wouldn't be absurdly high. Nevertheless, based on Apple's 2024 Q1 results, which concluded on December 30, 2023, the company isn't currently doing that. You would notice that the business only reported 2% revenue growth year over year. Apple is probably going to keep growing. However, there's no compelling reason to believe that Apple will resume rapid growth anytime soon. In fact, the firm's stock hasn't been keeping up with some of its larger tech peers recently, and Microsoft has even surpassed Apple to become the most valuable corporation in the U.S. Early this year, the Chinese market, which generates 20% of Apple's sales, showed signs of fragility and declining sales for the corporation. In January, Apple was forced to provide discounts on its most recent iPhone models in China due to intense competition from domestic smartphone manufacturers such as Huawei and Xiaomi. Additionally, China had ordered government officials to refrain from using Apple devices for work purposes and from bringing them into offices due to sanctions imposed by the U.S. on China, which limited China's access to the latest semiconductor technology. The business is placing its bets on a potential VR headset to spur growth once again. Without a question, the Vision Pro is a remarkable piece of technology. The headset's outrageous $3,500 price tag makes it appear more like a solution in search of a problem than a necessary gadget, which is likely to cause demand to decline. This is especially true when compared to the Meta Quest headset, which can range in price from $400 to $3,500 depending on its specifications. Furthermore, it goes without saying that purchasing a $3,500 headset is not the same as purchasing a $1,000 phone that you use every day. Another reason for the sale could be Buffett's desire to land an elephant, which is his term for making a significant acquisition, given that Berkshire has approximately $57 billion in cash on hand. He might still wish to hold on to some spare cash. In addition, it's possible that Apple has grown too much in Berkshire's portfolio, roughly 50%, if the stock market crashes and presents many excellent purchasing chances. Buffett's desire to sell off some Apple stock in order to diversify his portfolio and take advantage of chances elsewhere is not unusual. This brings us to our second point. the businesses where Berkshire Hathaway boosted its stake during the Apple sale. Berkshire increased its ownership of Occidental Petroleum Corporation and Chevron. The oil and gas industry has had difficulties in 2023 for both corporations. Overall, because of the erratic pricing brought on by China's economic downturn, which is the world's biggest importer of oil. Middle East geopolitical unrest and numerous nations implementing contractionary monetary policies have a detrimental effect on global growth. But oil and gas equities might do well in 2024, since it is likely that global central banks would adopt expansionary policies, similar to the U.S. Federal Reserve's anticipated reduction in interest rates, which might result in an increase in the demand for oil and an acceleration of global GDP development. Buffett may be purchasing a lot of oil and gas equities in just the first 5 days of February, since OPEC and its allies have been aggressive in boosting oil prices through output cuts. In 3 deals totaling $245 million, Berkshire purchased 4.31 million shares of Occidental stock, increasing its ownership holding to 28% and making it the company's largest stakeholder. In the rapidly expanding field of carbon capture, which is predicted to grow at a 24% CAGR to $122.9 billion by 2030, Occidental is also making significant headway. The company is currently developing a direct air capture facility in Texas that, when commercial operations start in mid-2025, will likely be the largest DAC facility globally, capable of capturing 500,000 tons of atmospheric CO2 annually. Vicky Hollow, the company's CEO, has also received accolades from Buffett, who described her as an exceptional manager of Occidental during Berkshire's annual meeting in May 2023. With its better-than-expected fourth-quarter results, Chevron, the 5th largest investment in the Berkshire Hathaway stock portfolio, looks to be on course to close the performance gap with the sector ETF, the Energy Select Sector Spectre Fund ETF. The company predicts that as it raises its investments in carbon capture and renewable energy, its output would rise by 4% to 7% in 2024. In addition, analysts project that Chevron stock would yield total returns of 20% to 30% by 2024. If oil prices continue to rise, the company may potentially yield operating cash flow of over $40 billion in addition to having a strong balance sheet. This enables Chevron to maintain high dividends with a yield of 4.33% and a 5-year growth rate of 6.25%, in addition to making significant acquisitions and aggressive investments in exploration. Chevron has set a massive capital investment target of $16 billion. Once ETSF Corporation is acquired, the annual capital expense budget is expected to be between $19 billion and $22 billion, allowing the company to support long-term cash flow upside. For instance, in October 2023, the company announced the acquisition of the energy company KES Corporation for a massive $53 billion for the current year. Therefore, as 2024 approaches, Occidental and Chevron seem like excellent investments to hold. However, it's common for investors to peruse Berkshire's filings in order to gain insight into the possible thinking of Buffett and his investment deputies. However, this does not imply that you should invest in these stocks without conducting your own due diligence or realizing that all stocks carry some level of risk, particularly oil stocks, which are subject to significant volatility. Given the current state of geopolitical tensions and industry-specific considerations, if you own Apple stock and are considering selling it, it's crucial to understand that Berkshire's decision isn't the only one that should be considered when making an investment decision involving Apple stock. Particularly considering that it remains the company's largest holding. Furthermore, given Ted Weschler and Todd Combs handle 10% of Berkshire's equity portfolio, this choice may not have been made lightly. Which managers make equity buys and sells is not disclosed by Berkshire. Buffett is in charge of the substantial Apple investment. It is impossible to determine if Buffett or Weschler made the Apple sales in the most recent quarter because he has previously stated that a tiny portion of it was held by one of the other 2 managers. In conclusion, while Warren Buffett's decision to sell Apple shares may have surprised many, it underscores the importance of adaptability in the world of investing. Buffett has consistently emphasized the need to reassess and adjust investment strategies based on changing circumstances. Whether it's a shift in the technology landscape, concerns about a company's growth trajectory, or simply a tactical move to diversify holdings, Buffett's decision reflects a nuanced approach to portfolio management. As investors and enthusiasts continue to speculate on the motives behind the sale, one thing remains clear. Warren Buffett's investment decisions are driven by a combination of astute analysis, a long-term perspective, and a willingness to adjust course when necessary. Ultimately, only time will reveal the full implications of Buffett's move to part ways with Apple shares. Investors around the globe will be watching closely to see how this decision aligns with his broader investment philosophy and whether it signals a broader shift in Berkshire Hathaway's approach to the ever-evolving world of finance. One thing is certain: Warren Buffett's decisions continue to be a source of fascination and discussion, underscoring the timeless wisdom that guides one of the most successful investors of our time. That's all for now. Will you be buying stocks from Chevron or Occidental, or will you be following Buffett's example? If you haven't already subscribed, please subscribe the channel and do let us know in the comments section below. Your support helps us keep up our work. Thank you again, and I'll see you in the next video.